Warren Buffett's top tips to beat inflation. Price increases are eating into consumer spending as inflation keeps rising. Gas prices and steep grocery bills are outside of our control, but we can control how we choose to live. Hello and welcome to Tom's Do-It-Yourself Investing, a channel where we discuss personal finance tips, investing guides, real estate, and the stock market. In this video, we're going to be taking a look at Warren Buffett's top tips on how to beat inflation. Even if you're not an investor, it's important to know what's happening in the economy and how you can protect your money. So sit back and relax, and let me walk you through Warren Buffett's top tips to beat inflation. Do you know what the most pressing issue facing America today is? It's not gun violence or the high cost of college. It's not even our infrastructure. The number one threat to our economy today is inflation, and if we don't take action soon, it will only get worse. This is why Warren Buffett, one of the world's richest people, has said that he plans to hold less equity and more fixed income investments in the future. Another top billionaire, Bill Gates, has also admitted that he would rather pay higher taxes now so that he can give his money to charity in later life when there are fewer people clamoring for it. What is inflation? Inflation is when the cost of goods and services is rising. Inflation has been around ever since the first caveman traded a piece of venison for a handful of berries. But it wasn't until the 20th century when the government began calculating the cost of goods and services that we had a way to measure it. The government uses the CPI, or Consumer Price Index, to track how much prices are rising. But it's important to note that this is an average of all prices in the economy. Some prices will be rising faster than others. Why is inflation so bad? You might be wondering, why is inflation bad? Inflation is so bad because it robs people of their savings. Imagine that you had $10,000 saved up to buy a car. Now imagine that the price of a car doubled over the next 5 years because of inflation. With the same $10,000, you'd only be able to buy 1/3 of the car that you wanted. Inflation also affects the price of government benefits. If Social Security remains untouched and the CPI continues to rise, people who depend on it for income will be left with less and less each year. The worst part about inflation is that there's no way to stop it once it takes hold. Just like the boiling frog, we're not even aware that it's happening until it's too late. Investment strategies to protect against inflation. The best way to protect against inflation is to own assets that rise in value faster than the rate of inflation. These include stocks, bonds, commodities, and real estate. Stocks. By owning shares in publicly traded companies, you're entitled to a portion of their profit. Profits are how companies make money, and as profits increase, so does the value of a company's stock. Bonds. When you buy a bond, you are loaning money to a government or corporation and earning interest on a loan. Since the amount of debt hasn't decreased, the only way a company can repay you is by raising the interest rate. Interest rates are tied to inflation, so if inflation spikes, so does the interest rate on your loan. Commodities. Commodities like gold, silver, copper, and oil are raw materials that are traded on global markets. When economies and populations are growing, demand for commodities goes up, and when demand goes up, so does the price. Real estate. Owning a piece of real estate is often referred to as locking in your costs. While rents may go up with inflation, the mortgage payment on the property will stay the same. Now let's go over how Warren Buffett wants us to beat inflation. Tip number 1. Diversification. Warren Buffett once said, "Never depend on a single source of income." And this brings us to tip number 1. The first tip to protecting against inflation is to diversify your investments. Many investors have all their eggs in one basket, and if that basket has a hole in it, their entire fortune is at risk. Putting all of your money into one asset is like playing Russian roulette with your finances. If you own 100 shares of a single company and that company goes out of business, you'll lose all $10,000. But if you owned 100 shares of 10 different companies and one of them went under, you would only lose 1,000. When you diversify your investments, you protect yourself from risk. You might not see the same high returns that you would see from putting all your eggs in one basket, but you also won't lose everything if the market goes south. This means that even if one or two companies are going down, you're still making money while you sleep. Or as I would like to say in Warren Buffett's words, if you don't find a way to make money while you sleep, you will work until you die. Tip number 2. Hold fixed income investments. Warren Buffett's second tip is to own a significant amount of fixed income investments like government bonds, corporate bonds, and preferred stocks. Diversification is good, but it's important to remember that it's not the only thing you should be focusing on. By purchasing fixed asset incomes like bonds, you're also securing a guaranteed future income. Tip number 3. Hold cash reserves for emergencies. No one can predict when a crisis will hit, but if you're prepared for anything, it's easier to recover from it. Buffett's third tip is to hold a cash reserve for emergencies. If you're dependent on a certain investment to bring in a certain amount of income and it suddenly stops working, you're in a precarious situation. But if you have a cash cushion, you can weather the storm until things return to normal. Cash reserves should be invested in a way that still earns a small amount of interest. You can open a free online savings account, deposit your money there to keep it safe, or you can invest the cash and get it out once you need it. As Warren Buffett once said, "Today people who hold cash equivalents feel comfortable. They shouldn't. They've opted for a terrible long-term asset, one that pays virtually nothing and is certain to depreciate in value." Tip number 4, investing in yourself. Keeping one's skills sharp and striving to be at the top of one's field are inflation-proof, Warren Buffett said. An individual with a skill in high demand will remain in high demand regardless of how much the dollar is worth. The issue has been addressed before by Warren Buffett. As Warren Buffett stated during the 2008 financial crisis, the best way to protect yourself is to sharpen your skills and become the best at what you do. According to Warren Buffett, investing in yourself is the best thing you can do. Investing in yourself may be your most profitable investment. As well as yielding future returns, it often yields current rewards. A priority on investing in both personal and professional growth is the key to achieving a better quality of life and being successful, productive, and satisfied. In order to live a quality life, you must consistently invest in yourself. Depending on your career field, you might not always need to invest in higher education to improve your skills. There are many ways to invest in your knowledge and skills, though. Attending workshops, conferences, and webinars are all options. Participate in as many of these as possible, as many of them are free. Almost every topic you can imagine can be found online. If you want to improve your talent or skill, read books, read articles, watch YouTube videos, or watch TED Talks. Tip number 5. Own gold and other precious metals for preservation of wealth. The fourth tip is to own gold and other precious metals. While they're not as liquid as cash, precious metals are a good way to preserve your wealth. The price of gold and other precious metals have skyrocketed over the past decade as investors flee the stock market. The price of gold has risen nearly 400% since the Great Recession, and it's believed that an economic downturn could cause it to rise even higher. Commodities are a great investment, but they're even better when paired with gold. When you own both, you're hedging your bets in case there's an economic downturn. But let's not forget that Warren once said, "Only buy something that you'll be perfectly happy to hold if the market shut down for 10 years. Would you be happy to keep the gold? Let us know in the comments below. Inflation is the biggest threat to our economy today. When we ignore it, the consequences will only get worse. To protect ourselves, we need to diversify our investment portfolio and make sure we have enough cash on hand for emergencies. And we need to own gold and other precious metals to preserve our wealth. There are many ways to protect yourself against the dangers of inflation. All you have to do is take action and start implementing these strategies today. Before we move toward ending the video, I'd like to quote one of the most valuable pieces of advice from Warren Buffett. To invest successfully over a lifetime does not require a stratospheric IQ, unusual business insights, or inside information. What's needed is a sound intellect framework for making decisions and the ability to keep emotions from corroding that framework. You must supply the emotional discipline. What are your thoughts on tackling inflation? Do share your thoughts in the comments below. If you have any questions, do not hesitate to ask them and I will get back to you. If you haven't subscribed yet, make sure to subscribe and hit the bell icon. If you found this video helpful, give it a thumbs up and don't forget to share the knowledge with those who might find it useful. I will be back with more videos. Until then, take care and stay tuned.